All right, hey there. Good morning, everybody. Chris Franks with Texas West Capital. It is a Bitcoin morning, right? What is this? Wednesday, the 16th of December, 2020. In San Antonio, Texas, a beautiful day. Bitcoin's popping. Everybody's feeling pretty good, right? Just control your emotions, guys. Who's here already? Satoshi Badger's in here. Hasta la vista, Silvio. What's up, buddy? Checking in from South Africa. Man, I love it. Still over there, huh? Sharon, what's going on, man? Yeah, definitely a good day for crypto. Amber Lee says, good morning there from Amber and the Fat Little Indian. Oh, some of my favorite people. I love you guys, man. Nevolution, what's going on, man? Hank's here, says happy all-time high day. Mac, you're going to be saying that a lot, Hank, if that's the case, right? Overall. Hey there, Mac the man. Gotta love it. The Bitcoin high, I do love it. I'll tell you, and that may be surprising some of y'all, but we'll have a little discussion about that here. It seems that many retail traders still aren't understanding, and so we'll have a talk about that here in a bit. But yes, I'm happy it's higher. Sure. Always making money, man. Data, what's going on, man? Good to see you here. Guglielmo is here as well. Glad to see you checking in. Chris Day checking in. What's up, Chris? Sean's here. Flamin' Gala? Hey there. Good to see you. I'm not sure what that means, but it was fun to say it. Hank says, well, I remembered what happened after the last all-time high day, so definitely. Let me see here. Okay. So, let's kind of check this out here. Hey, what's going on, Onyx King? Good to see you. I won't do altcoins today. We do that. Mondays and Wednesdays are basically Bitcoin days. Fridays are when we take a look at all the different markets and we take some requests and we look at some different things you guys want to look at. Yeah, so it'll be Friday that we do that. So if you want to jump back in again on Friday, we'll be able to do some there. Anyway, so let me jump in here, guys. If you haven't yet, join us at howtotradetowin.com. If it surprises you that I'm happy that price has gone up, you definitely need to join us. One of the things we're finding out here is that people still, especially if they're newer traders, but many traders have been in for a couple of years, they're still basically newish retail traders. And again, it's not just time alone that makes you a more experienced trader, guys. It's doing the right thing. That's what makes you an experienced trader. Getting consistent with that. You can be in for 3 or 4 years, 5 years, and just keep feeding money to the machine, basically, and still be considered a brand new trader because you haven't learned. You haven't gotten beyond those mistakes that you make as a new trader. And that's where I usually get, people are like, oh, why are you so bearish? I'm not bearish. I'm actually probably more bullish than anybody out there because I'm bullish on the technical side of it. I'm bullish on the possibilities beyond emotion. But here's the thing, guys. If you have a macro view, which, by the way, the expanded flat scenario is very much a very realistic possibility. Still, we usually look for the 123.6 extension, 123.6% extension. That's around 23,700. That's just below the $25,000 round number in tens there, which is psychological. And price doesn't have to get that high, and it could go higher. But, again, when you're doing waves, when you're doing Elliott Wave, there are levels that you generally look for price to target. And then you just say, okay, does it hit them or does it not? How does it develop into that? So, again, normally a wave B on an expanded flat hits the 123.6% extension of wave A. And, again, that's around 23,700. So, technically, still a very viable pattern. But just because you have that, and just because you're looking at possibilities of reversals along the way in a trend that's going up, doesn't mean you can't go up. You should still be going up, guys. You don't want to short, your trend that you're looking at until you get confirmation that you should be shorting it. Retail traders tend to be very emotional, though. They tend to be very impatient, which again comes from emotion. And so they assume that if you're talking about some bigger picture, that if it doesn't happen tomorrow or today, then you're wrong, then it doesn't happen. And that's completely wrong. And that's why they end up losing money a lot. The best thing that you guys can do, two of the best things you can do right now as new traders, guys, is take the colors off your charts using black and white. First of all, because the green and red denote emotion. Green is going to make you feel really, really bullish. Red is going to make you feel very, very bearish, okay? The other thing you want to do is get rid of the words bullish and bearish in your vocabulary. Because if you speak of things as being bullish or bearish, that makes you believe that there's only one of two ways you can be in the market. You either have to be bullish or you have to be bearish, which means that you kind of pigeonhole yourself into one thing and you can't actually trade the market effectively. So these are things that you guys need to understand. Most professional traders don't really rely on the terms bearish and bullish. They play the price action as it develops. All right? So you need to pay attention to that. Because again, if you do, then that just, it'll help you really. It'll help you. Remember, guys, I keep talking about the biggest thing that you have to face as a new trader or as a trader in general is yourself. It's your emotion. It's your impatience. It's your lack of follow through. It's your lack of risk management. These are the things that you notice. None of that says anything about Elliott Wave theory or Wyckoff or supply and demand or anything about the chart itself. It's all about you and these things that really don't have to do so much with that. They have to do so much more with you. But these are the things because most traders don't recognize it and don't realize it. And those that are told just kind of play it off and ignore it like, whatever. Guys, I'll tell you what, if you don't take these things into consideration and you don't start practicing these things, there's no way you're going to be trading effectively. You're going to lose any money that you make along the way. And that's not the goal. The goal of a trader is to profit, lock in that profit, rinse and repeat, right? And if you're in the wrong side of the trade, it's to limit your losses. So just want you guys to keep those things in mind because, again, the idea is to get you to break out of this. Remember, if you're coming and if you are retail, you are considered liquidity in the charts. Your money is used to move price. And it's usually used against you. So if you don't want to be liquidity, you have to change the way in which you think and the way in which you do things. And the things that you accept as truth in the market, which really aren't. Okay? So just a heads up on that. You can join us at howtotradetowin.com. We'd love to have you there. By the way, if you are new, if you haven't been with us before, we do have a coupon code here for you. It only works for people that haven't been with us before. You can get your first month of Tier 3 with us for half price. For half price. Let me see here. Right there. It's Tier 3, 50% off first month. I'll post it right in here into the chat. So what you do is just go to, let me see if I can get it back over here. Where are we at? Up here. There we go. So you just go to join us here, and then you click on there, and you go to Tier 3, and you'll have, you can choose you want to get monthly, quarterly, annually, all that stuff. Just pick the monthly, and then when it goes to your checkout page, it'll say, hey, do you have a coupon? Add in the coupon, and there you go, guys. You can get it for half price. Again, Tier 3, over 40 hours of educational video content now. Every week on Wednesdays, you get an hour-long live stream with me where I teach you a new trick or technique or give you some tips on how to more effectively trade. And these tips and tricks that I show you and techniques are things that you can use even if you've never traded before in your life. There's something you can implement immediately, like right after that live stream to make you money. If you need to, wondering, oh yeah, whatever, he's just blowing you steam up, smoke up my rear end. Anybody here? We've got lots of Tier 3 members tuning in. If any of y'all want to tell them, if you want to vouch for me, go ahead. It's great stuff, though, guys. I'll tell you. We get over 20 assets on a daily and daily and intraday basis that we update. Over 50 setups a week. Between hot takes and chart requests and everything. And so, you get all this and so much more. So we'd love to have you there, guys. Come on in. Let's jump on in here and see where we're at. Who else is here? Brian, what's going on, man? Let's see here. Hank's saying technically the DXY still hasn't hit the high 80s. Very close, though it is. Yes. Let me see here. Flaming Gala says that I definitely know my stuff. I appreciate that. Thank you. Oh, Bobby, hey, what's going on, man? Let me see here. What else is going on here? BlockTech's here. Brian Riley's here. What's going on, guys? Crypto Mowgli's here. Let's see here. Data says those Wednesday education tips are wizardry, literally. I appreciate that, man. Onyx King says the amount of content is insane. Too bad I didn't join earlier. Yeah, again, guys, I know it's hard to believe. I get up here, I tell you what we have. I'm just a guy trying to sell a thing, right? But, again, you hear it there from people that are actually with us. The content that we pump out is more than you're going to get anywhere else. And you sure as heck aren't going to get it for the price that we charge. You're going to get to pay a lot more if you ever get anywhere near that kind of content. So do it while you can. And the thing we tend to do is, if you get in a certain time period and prices rise, say, a year later or something, we usually grandfather you in and let you stay at your regular price. You usually don't end up going up in price. So there's a lot to be said there as well. Oh, sorry about that. I have my throat here. So one of the targets that I had sitting on here previously was this red line right here at around 20,439. And you can see this morning we hit it with this one candle here about 7:45 a.m. my time this morning. And we pulled back and then we pushed through it. But almost a perfect touch of that target there as it went up through here. It ended up being just below the S4 pivot, or the R4 pivot, sorry, here on the 15-minute. And then we had the 5. Now, so here's where we are at this point. If we look at TD sequential, we had this 9 on the 15, which just went right above the R5 pivot, so it ran all the pivots. It pulled back. Let me get this here. It pulled back to the R4 pivot, which is actually based on this count moving up here. You've got a 1, 2, that's a 3. That gives you the 23.6 on the 4. So continuation up from here, if it continues up above this high here, we're probably looking at a minimum wave 5 target up here of 21,378. Now there is the possibility that this is an expanded flat here. So you've got an ABC down and then an ABC up here. So we would need to see this continue on down below that swing low. And in that case, we'd be looking down here at the 38.2. Excuse me. This 38.2 retracement, which is 20,229. And if that happens, then the wave 5 minimum is 21,162. But if it continues going up through here, we're going to look up here toward 21,378 at least. We also have a couple of channels on here. So depending on how you want to look at this, let me just make this one look a little bit different here so it's easier to identify. We'll go with red here. All right. So now if this count coming off the bottom here is correct, and we got a 1, 2, 3, 4, and this is 5, then with Elliott Wave, you draw a wave 2 channel here, which goes from your wave 2 swing low to your wave 4 swing low. And the top of that channel is at wave 3, okay? And in that case, if we look right here, zoom in here a bit so you can see a little bit, we pushed up through it, came back, retested perfectly that resistance as support, and we're bouncing off that. And so again, you'd look for that wave 5 up here. Now, the target based on the height of this channel right here, because it's still a pattern. A channel is a pattern, guys. That pattern target is right up there around 21,500, which is just a little bit above that 21,378, almost 24,000 area. So I would potentially see a little bit of overextension here, and it gets you just below this large channel resistance here. So let me zoom out here a bit, and you'll see this large channel is the one off the low here, off this November 26th, November 26th low down here. So low, high, low, they get you up to the high down there. So that's a good channel to be watching, and your targets here kind of take you up to that area. Now, what are some other things we watch? Well, if you're looking at this channel breakout here, I'm going to do this and I'll get rid of it. Whoops. God dog it. Sometimes it's not open for the particular time frame you're on. Let's go ahead and do this again. We'll make it red, and then we'll put that visibility up. There we go. So if you're potentially looking at this as kind of a channel here, then based on the height of this channel, you have a target of about 20,790. And so we hit that with this previous candle here. We hit that target with this one right here. This one went up to 20,800. That target there is 20,700. So we've hit that target, which is good. So we've got that. So we'll get rid of that. Like I said, these pattern targets, like a breakout of a channel, is usually a wave 3. So, and again, this would give us potentially a wave 3 up there, at least with this locally here. You know, we'll see how the rest of this goes. But for right now, it hit the target. That's the important thing. If you don't want to use Elliott Wave, you know, you can use pattern targets here. And so now we also have, I showed you the wave 2 channel, and so we also have what we would call a base channel here. And that comes from your low where it starts to your first kind of, to wave 2. So if this is actually a 1, 2 instead of a 1, 2, 3, 4, if this is a 1, 2, a very short 2, as a running flat here, then that base channel is where we're finding resistance right now. And so on something like that, here's the thing. Well, let's do it this way. We've already looked at the potential target here, with this potentially being, you know, maybe a 1, 2, 1, 2, 3, 4, 5 here, and coming off of this. Now, that would then be potentially a 5. You can potentially get a 1, 2, 3, 4 here, and then so you've got a 1, 2, a 3, and this is a 4, and then this is 1, 2, 3, 4, 5 gives you a 5. Okay, so you can get a 5 count up from there. The other idea is it's more bullish than that; it's going up higher, which starts looking at the other targets that we've been talking about. And in that case, you've got this as a 1, 2 probably. And so if you measure that out, I think I've already done it here. Let me see. Nope, I didn't do it yet. If you measure that out as a 1, 2. Let's see, there we go. 1, 2 on that. Then basically, if that's a 1 and that's a 2, then your 3 is up here around 22,000, 22,050, and your 5 is a minimum of 22,750 or so. All right? And so that would get you then, you know, again, a 1, 2, potentially a 3, 4, 5. And those are all minimum targets. Price can continue pushing, you know, beyond that, but that's generally what we look for. Now, the thing is, if we're breaking out of this large channel here, then our pattern target, comes up here to, you know, wherever it breaks out to. It basically comes to about $3,592, $93 above the point of breakout based on the height of this channel. And so that gets you up here at about 25,300, 25,400, just above that 25,000 level. Now, why is that important? Because I told you that generally, if this is going to be an expanded flat right here, so again, it's an A, B is a triangle, C, A, B, C up here, then you find your 123.6 of wave A right here around 23,667. And again, I could see it moving just a, you know, it's really at the end of the day, 140, I'm sorry, not 140, 400 or 600, $700 above that is really nothing. You know, it's a little blip. And so I could definitely see this pushing up to around that 25,000 area to hit that round number. Remember, the all-time high over here hit 20,000. 25,000 is that next round psychological number. So if this were to be, then that would be where I would generally look. Now, if it goes above it, does that mean it's invalidated? No, it doesn't. You know, sometimes those wave Bs extend further. I think, as usual, though, once you get to the 1618, by the time you're getting there, I think at that point you go, okay, well, it's probably not going to happen. It's not that it can't, but the odds are significantly against it. So if we put this in here and we say, okay, well, where's the 1618? That's up here around 30,000. So what does all this mean? This means that you don't short until there's a reason to short on this larger time frame. If you're trying to trade shorter time frames, that means you're probably going to get chopped up along the way. There is a lot of supply coming in here. People that held from here that are just trying to get out. Other people who have bought down here or over here, you know, down at the lows at 3,200 or over here at, you know, on Bitstamp here, 3,800, looking to potentially exit around that all-time high area because they understand in markets many times you get a strong reversal at that all-time high area. So you've got a lot of supply coming in on there. So that's going to give you a lot of back and forth, a lot of strong movement. And, more likely than not, if you're playing shorter time frames, you're probably going to get stopped out. Now, we've got specific ways to mitigate that, which I've taught, especially over the last few weeks, 3 or 4 weeks with Tier 3 on our Wednesday streams, in which they can handle that. And they can handle, if they get stopped out, how to get back in effectively. Real good strategies. And again, those are all available, whenever you join. They're all listed in there. You can go back and watch them, which is great. So a lot in there with that. But if you're just trying to play this without those strategies and trying to ride this up here, the odds are that you're probably going to get chopped up in areas like this right here. Because it's difficult to trade, especially for a new trader. So, that's kind of where, you've got to pay attention to what you're doing there. Let me pull back here. There we go. The one thing we can say on the daily, we're almost into overbought on Stochk RSI. We're almost into overbought on RSI. Right now, we've got bearish divergence right here on RSI. So we've got lower highs from the 30th of November to now. So that's basically, you get these higher highs here with price, lower highs there with RSI. But as always, guys, the day is not done yet. And not only do you have to close as such, but then you have to go the other way and confirm it. So price, not only would you have to close as a lower high, but then price the next day or next 2 days would need to come on, continue down so you could come on down here and confirm it. So it's just a possible, right now it is bearish divergence, but without the day being done and without, even at that point, it's only a pause because price could continue up the next day and continue pulling it up above that. So just be aware that is building there. The one thing that is more interesting to me is the weakness in the trend. So this is the ADX here, your average directional index, or oh my gosh, what's it called? Average directional index. Yeah, I was right. Okay. Don't question yourselves. But you'll notice here that it was on an uptick. Look at this. It was on an uptick from down here at around 10.5. And it's been on an uptick all the way until this point right here at about 18.7. All of this right here has resulted in a strong decline in that strength of that trend. Doesn't mean price has to reverse right now or anything, but it does mean you should be paying attention. Generally speaking, in terms of pivots, here we came in sideways between the pivot and the R1. We bounced off the pivot, moved back up above that high. Generally should be considered bullish. Often what happens is price will near the R1 and then you'll get a pullback. So I wouldn't be surprised to see coming up here around that 21.7 area and then pulling back toward, I had this all-time high here, or this node here around 19,184. I wouldn't be surprised to see that at all. And that would kind of run in with the whole idea that this is a 1, 2, 3, 4, 5. Again, when you're trading pivots, usually you're bouncing between pivots and then, hit the pivot, that area there, and then it pulls back to the previous area of resistance before continuing higher to the next pivot. So if you're just trading pivots, that's generally what you would expect from price action here. So that's what I'm going to be looking for, and it does align with that particular count. Now, that one count, that red count says, okay, maybe we've got a 1, 2, 3, 4, and this is 5. And it's pretty short compared to the other one, so this would have to be a 3, this would have to be a 4, and this would be a 1, 2, 3, 4, 5 of 5. But that's only possible. Again, we'll watch and see how this plays out on this shorter time frame here as we get up toward those targets. We'll see how that plays out from there because, again, we do have the other count in purple here, which suggests higher up. This other count in purple suggests that instead of, here we go. Instead of this red count here, let me see, right here, which says 1, 2, 3, 4, potentially 5 up here. What we have with the purple count is a 1, 2, 3, 4, 5. So it gives us a 1, 2, 3, 4, 5. And so with that, of course, that gives us then that wave 3. That's where we get that wave 3 right there around 23,540 or so. And a minimum wave 5 up here right around 25,000. And so if this is a 3, 4, and then this is a 1, 2, and we get this move, well, guess what? All of a sudden it starts looking like, it's still this where I'm expecting it, if it's going to be a expanded flat. It's taking it right to that area I'm kind of looking for. And as far as, again, the pattern target of this ascending channel here is right around that same area. So if we don't reverse well from the shorter term target here, this 21,700, 22,000 area, and come on back well, then I'm going to be looking in that 23,700 to 25,000 area for that more macro reversal going on there. Again, if it continues up through that, as we talked about, doesn't mean it's necessarily not going to happen, but the closer it gets to 30, the more unlikely it is. But again, that does not mean that if we're getting up above, 22,000 continuing, that doesn't mean you just blindly sell at 23.7 or 25. That means you've got to look for a confirmation on the macro reversal if it were to happen before you do. Otherwise, you can just be getting caught up in here on something that continues pumping up higher. And again, I think that's, it's these nuances like that of trading that a lot of new traders I apparently don't get because of the way they approach me when I discuss things like a larger macro reversal possibility. By the way, the larger macro possibility is not just because it's possible with, the Elliott Wave count there, but it's also because of everything that's happened in the economy. What's going on with governments, what's going on with the financial systems, everything else. If you are sitting here still believing that money printer goes brrr, or however stupid I sound saying that, if you still believe that, please do yourself a favor and go read up on QE and what it does. QE is deflationary. QE results in asset inflation, which, comes right before that deflationary aspect. And again, as I argue, in a deflation, products and assets lose value. I'm not just saying this, guys. This is what happens in deflation. Oh, but we can't go into inflation because of the money printer. And then it just goes this roundabout circle thing where you're not accepting that the money printer isn't printing money that's circulating in the economy, guys. Let me talk to you real quick. If you have not, please, follow me, guys. If you haven't, at least join our Discord. You can do that right here at howtotradetowin.com. You can hit right here with this connect button. You can get on the free side of Discord. I posted an announcement in there because I know sometimes you guys don't like social media, and I don't blame you at all. Social media is just awful. But I put this video up here, and he does a great job. This is Stephen Meter. One of our members actually showed me this video, and I actually followed him because of this. He presents a very cogent argument concerning bonds, macro outlook with the dollar, bonds, and how it affects FX, Forex markets and whatnot. And explaining why, likely it'll be the China devaluing its yuan that sends everything else into its thing. And, it has to do with who's buying who's buying treasuries, who's not. Our biggest trade issue we have is with China. So if China does what he's talking about, which is devalues against the dollar, so that they can get cheaper debt as they take on those treasuries and whatnot. I mean, that other countries are not just going to sit there and go, oh, well, China can go ahead and get all the play. No, they're going to come and do the same thing. Again, that's the big thing because the dollar is the universal, basically, it's a thing of which most everything else is compared against, right? It's what most debt in the world is denominated in. It's what oil's priced in. It is the world's reserve currency still. Again, I don't care about your biases or your emotions or whatever. This is the reality. This is life. This is what is today. Oh, but it's going to change. It might. But this idea that it's going to change in the next 3 years is just stupid. I'm going to be honest with you guys. It really is. Things like that take a lot longer to change. And what I find is most people have an emotional bias that they then use their feeling about the dollar to support that emotional bias. It is what it is. But right now, things are what they are. And as long as they are what they are, he provides a very good explanation of how it would potentially play out. So definitely check that out there. I've also posted a few other things here, guys. By the way, if you use TradingView, you can come on here. There's a link on here. And I put it in the announcements channel there on the free side of the server as well, where TradingView has a new desktop option now. So I've looked at it, man. It is a lot less resource intensive than having charts open up in your browser tabs. So that's a big, huge plus, man. I'm loving it. Merrill Lynch, I'm sorry, not Merrill Lynch, but Bank of America, stating that first quarter of 2021 is likely to be the big reversal time. I posted this article right here from the International Monetary Fund, in which they say the COVID-19 pandemic is causing an unprecedented worldwide economic contraction. Again, guys, if you believe that the dollar is just going to go to hell, and all this infinite money printing and whatever means these things that you think it does, which it doesn't because of QE, the way in which it's printed and the way in which it's distributed. As I've told you, what's actually going on is contraction. You're talking about expansion, but there isn't any expansion going. And again, it's been noted here by the International Monetary Fund as well. That's why, again, you got the Eurozone in deflation. You've got China in deflation. You've got the U.S. teetering on deflation right now, okay? This is why. But what they go on to say is the policies implemented because of the pandemic may have, if unintentionally, increased medium and long-run macro-financial vulnerabilities. Again, the idea that, hey, reversal coming up here. Same thing I've been talking about. Let me see here. By the way, if you want somebody who's talking about this morning, Mr. Rich here, my Tier 3 mentorship has been so fruitful pre-internet, it may have taken me 10 lifetimes to find someone like you to help guide my journey. I'm full of gratitude, and it ain't the Bitcoin talking. Again, I appreciate that. I can sit here and tell you that what we do is straight up awesome and whatnot, but it's when our members talk about it, I think that it makes the most sense. So I was really appreciative that he shared that with us. But continuing on here, let me see here. Bloomberg article here. The world's policymakers must act urgently if they are to head off a looming solvency crisis that could cripple economies after the pandemic. Solvency, not dollars, businesses. This is what I was talking about back, if you guys were following me back in March and May, that area over there, especially about May, I guess, when I really started talking about it. And I talked about what was likely to happen in Q4. More pandemic, we're going to have a second wave of pandemic, which we're having now, which means more close downs. Guess what we're having now? Over there in Western Europe. I think I saw the Netherlands are shut down as of midnight the other day through January 18th, I believe. Hank, you're over there, so I think you can verify that. And other countries also doing the same thing there, or getting into doing that. But we talked about how, as it got to Q4, we were going to see real estate become forfeited, go to auction, whatever. People can't pay it anymore. Not just personal, but we're going to see it with the commercial especially. And we did have that. We've got that going on. And I mentioned that businesses, we were going to see a huge uptick in bankruptcies and whatnot as we got to the end of the year, beginning of next year. That's what we're seeing now. That's what they're referring to. So we talked about all this back in May. This is what's going on now. Other things that you need to be paying attention to in all the markets, guys. The Commodities Index, the Bloomberg Commodities Index, is nearly topped out now, finishing what looks to be an ending diagonal. Now, gold and silver at the time were printing possible head and shoulders. They're not anymore. But nonetheless, there's a lot of stuff going on right now. Bank of America survey, long tech is the most crowded trade for the 8th straight month. We've talked about that. Your tech sector is where everybody's long. That's why the NASDAQ continued to pump higher and higher. That is the most crowded trade. What they mean by most crowded is where you have the most offsides. So in this case, your long side on tech is very much skewed. You have so much more on the long side than you do on the short side. Why do we pay attention to that? Because when things get too long or too short, the market sets to correct itself. The second most crowded trade is the short US dollar, which means we should be setting up for a reversal in tech, lower, a reversal in dollar, higher, and the third most crowded trade is a Bitcoin long. Now, this doesn't say anything's going to happen tomorrow or today or anything like that, but it says that you need to be paying attention to these things. Everybody is so blindly bullish right now. They're all emotionally bullish in everything that they're not paying attention to something like this. And the reversals, when you're this crowded in your trades, the reversals are often very sharp and very steep. They catch you off guard, and most people don't have enough time to lock in profit or to get out of their trade. So these are things you guys need to pay attention to. Again, I'd love for you guys to follow me on Twitter. I don't post a whole lot. I don't get on there and have long conversations with most people. Hank and I right now are having a legal discussion about law. I've got a law degree. I have my views on law because of that and other things that I have. But we're having a nice little conversation there. But most of the time, I don't have large conversations, and I don't post all day, every day. But when I do post something, it's because I believe it's something significantly important that you should be paying attention to at that time. So definitely follow me there, guys. Let me see here. So that's kind of, this is kind of where we're at right now with everything. And it looks like we may be getting that expanded flat here, maybe. We'll see if we can get this moving on down below that swing low, heading down into that 20,229 kind of area there. I'm sorry, let me just kind of catch up with you guys here. Just wanted to get all this out here for you. Let's see. Oh, Amber Lee agreeing with the Onyx King about the amount of content in Tier 3 being insane. Appreciate you guys. And data, of course. If you get to see the Tier 3 education, it feels like Gandalf is sitting down with you, opening his book, and starts explaining stuff you've never heard or seen anywhere before. It feels like Super Mario Kart picking up a star. It's because of the beard. That's why you said Gandalf, right? Though my beard is nowhere near as long, I assume. Let me see here. Mark the man is saying, so we should go long over 20,900, or we go long at 20,200. I mean, if I'm looking at this right now, I've showed Discord today. By the way, guys, those of you that think I don't trade, I do tend to sometimes keep a Discord up to date with what my trades are. And I showed them this morning. I took a screenshot. I entered back over here on the 26th of November. 3 positions, market bought. All right. So don't think that I don't trade. And don't think that, because my macro view is potentially more down, that the possibility is there, that I can't be longing in the process, okay? Because right now, I'm long from that 16, what is that there? From around 16,795. 16,795, 16,794 and 10 cents, and 16,911 and 10 cents. Those are my 3 positions. From there. So that's where I'm long from. But if I were to look to enter right now, this is what I would be watching. Sure. But I want to see if it's going to come down here, I want to see a reversal off this. I don't want to just buy it the minute it bounces there. That's stupid. That's like trying to catch a falling knife. I don't do that. You're going to lose too much money doing that. But what you want to see is a move from here and a back up. And so, generally when you guys are trading, you want to look at your, its swing highs along the way. So if this is a ABC down, ABC up, we should have 5 down, okay? It should go 1, 2, 3, 4, 5. Maybe from here. So 1, 2, 3, 4, 5, kind of thing like this, right? So where would you enter? Well, what I would enter is that 4th wave. A break above that 4th wave would be the first place that makes the most sense to enter. Beyond that, it's a break above wave B. which would be up here at this recent high around 20,896. So what'd you say, 20,900 or 20,200? Yeah, that's pretty much it. Yeah, that would be how I would approach this trade. However, you have to have strong risk management, guys, because you cannot get in down here without risk management. Because the last thing you want is to get in here, it goes up above. Because even if it gets above that wave 4, it doesn't guarantee the price is going to continue higher. If this is 5 down, this could very well be a 1 down. You'll get 3 up and then 5 more down, 2, 3 kind of thing. So you have to absolutely know where you're going to put your stops. So me personally, those of you that have been following me, you know that I have a way of looking at supply and demand structures. And so that's what I'm going to use here. And here's how I would approach this trade. Get ready, guys. If you want to know how I would do this, if I was not in yet or I wanted to add right now I'm assuming this is an A, this is a B, and then we'll have a C down here, okay? Doesn't have to happen because right now we're still above this swing low. So we need to get below this swing low, below 20,447 or so there, okay? So let's say we get this move down to 20,229. And we reverse off that and we go above wave 4. That would be my entry. My stop loss would be one of two places. Either below the mid-range of this demand structure here, below the EQ there at 20,142, or below the swing low here at 20,055. For me personally, and this is me because this is my system that I've developed and I know what I'm looking for, generally I would put it below that's a certain little bit below this EQ here. Because the idea being that if you're dropping down below that EQ and pushing down, or especially below the swing low here, you've got lower to go. And even if this is an expanded flat, it doesn't have to stop at the 38.6. It could go down to the 50. We could see it coming all the way down here to this cluster of demand down here and reversing somewhere around 19,730 to 19,865. That's very much a possibility. But if I was to play this and I got a reversal off this area here up through that wave 4, that's what I would look for. I would feel more confident once we got above this swing high up here. And of course, my immediate target would be this 21,162 at least. Now, if we have something like that, that's going to make me question this red channel here. Because if you've got a channel that's legitimate and not an Elliott Wave channel, then price should bounce off the resistance and continue, or should not go back and forth above, through resistance or through support back and forth on it. Now, in this case, this particular channel is a wave 2 channel. So it's not a big deal. It's not the same kind of normal channel. The one that I teach in our, those of you that are in Tier 2 and Tier 3 have access to our video education there. And there toward the beginning, I talk about channels. That's a pattern channel that I'm talking about, as far as price should bounce off resistance and continue higher, not, lollygag back and forth across it. But this right here is a wave 2 channel for Elliott Wave. Wave 2 to wave 4 comes off of wave 3. So price often bounces around it, or it'll shoot up right through it either way. So it doesn't kind of follow those same rules. So I just wanted to get you guys let you know that there is a difference between the two types of channels. But nonetheless, because this is a wave 2 channel, this dropping back down here wouldn't necessarily bother me a whole lot. The only other thing I would look here and go is if we were to go from here and get back above this swing high up here, basically 28.96 or whatever, 28.99. If we get above 20,900, to me that would be the best signal to long. And at that point, then my my stop loss would necessarily have to be down here at this swing low at 24.47. So it's a pretty big stop loss there. So you just have to make sure that your risk management is on point so that you don't lose more than 1% of your portfolio if it drops below that swing low. But that's how I do it. Now you can probably zoom in. I don't know. This is a 15-minute time frame. Geez. I don't know that you can maybe zoom in on a smaller time frame and maybe find a different area to look at. I guess you could zoom into the 5-minute here, and you could maybe put your stop loss below the 20,542.5 here. Because the idea being if you're getting down through that, then this should be done. So it should head lower. But definitely, below this swing low over here. But that's how I'd look to do it, if I were to enter at this point right here. I have no intention of entering at this point right now. I might add more if we get down here and we get a reversal off this, maybe. But I've got a pretty great position running from down there at 16,794 and 16,911. So, again, with like I said, I think we're headed up higher overall, at least a bit higher here, if not further up. But there's still a lot of iffiness in this area. So I'm content with my position where I entered and how big it is and where we're riding here. I don't necessarily need to, see a reason that I have to enter here. But if I do, again, it would be likely on that reversal through the wave 4 kind of idea. Let's see here. Hank says, I'm waiting for it to turn resistance into support again. There's no way that SR level is not getting retested. At least, very unlikely it isn't. Yeah, most of the time it does. Yeah. Brian saying, I don't understand the upside appeal from here, especially short term. Need a real correction. This feels retail. Yeah, exactly. If you're patient, guys, price does return. Price does pull back. It just is, how long does it take and how patient are you? What kind of risk are you willing to take on? I think, unfortunately, most retail traders are way too risky, risk tolerant. But it's because they're gambling more than trading intelligently. And that's what we try and help you guys do, over at howtotradetowin.com. And what I do here is try to help you to see things maybe differently than what you have so that you're entering more intelligently. Remember, guys, the idea, the number one thing, obviously, well, by the way, we do have a bearish divergence right here, just so you can see. But the number one thing as a trader is risk management. Believe it or not all this stuff that you're seeing on the screen here, none of that. This is all secondary, cherries on the top kind of thing. You make your money with your risk management. And so that's the most important thing. But the corollary to risk management, to making sure you're not losing, say, 1% of your portfolio on any single trade, is that you don't just enter any trade just because. You look for the higher confidence trades. This is where you're looking for the pullbacks. You're looking for the confirmations of resistance as support, or if you're going down as support as resistance. These are the things you're looking for. You're looking for, like we had the 4-hour here, like we talked about this. And I know Scott made a big deal about it as well. Here on the 4-hour, we had this bullish divergence here in oversold. This is a higher confidence trade. This doesn't tell you it's going to go way up here, but it tells you that it should at least go up toward this cluster here. That's a good entry. That's a good reason to enter there. Those are the kind of trades you want. You don't want to enter just because there's a chance, because you're still going to lose more times than you're going to win if you're doing that. And even if you've got good risk management, it's still money that you don't need to lose. And so the more money that you're losing that you don't need to lose, the more money that you're losing that you don't need to lose, the longer it takes you to get to the goals you want to get to. Remember, guys, being a trader is not about buying that absolute bottom and selling that absolute top. It's about consistently locking in profits and then reducing your losses intelligently when you do lose. If you can do those two things, the rest of this takes care of itself. But traders have a problem. Again, it's emotion of locking in profit. Listen, guys, if you're in profit right now and you're not taking profit, when are you going to take profit? If you're in profit and not taking some sort of profit at this juncture, when are you going to take profit? I'm not telling you have to take profit here, but that's something I want you to think about. Because as retail traders, we often don't consider that. We say, oh gosh, we're going to stay here because our emotion takes over. Oh my God, it's possible it could get up here. And if it does, I'm going to have so much more money. And then instead of getting out there, you go, but if it keeps going up, I'm going to get more. And then all of a sudden it does a huge big reverse like Bitcoin likes to do. And next thing you know, you've lost a whole lot of profit that you could have had you just gotten out. Like you had told yourself you were going to, if you had told yourself you were going to previously. So again, guys, you're going to fight against yourself with your emotions. That is the most difficult part of trading. Yet nobody tells you that, do they? This is the stuff we spend a lot of time reinforcing. Let's see here. Let me see here. Hank says, trading is trading. It's not about buying low, but about buying lower than you sell. There you go. That's it. Unless, of course, you are shorting, in which case it's buying lower than you're shorting, right? Let's see here. Trenton, what's going on, man? Says, I am playing with the fib extension tool. How are you getting the targets for the expanded flat? Okay, so for the expanded flat, again, what we're looking at is we're looking at this overall structure here. The idea being that this right here is an A, a B, a C, because it is a triangle right here. And so that's an ABC, and then we're looking at this as an A, B, C here. So then this altogether becomes an A down here. This ABC is an A, this ABC is a B, and this ABC down here would be a C, the larger count here. So how do I get that? So then I look at this and I go, okay, well, I measure out wave, oops. It's not the fib extension tool that you're using for wave A. You're just looking at your general fib tool. So right here, your fib retracement, Alt F. And all you're doing is running it from the bottom to the top here, from your all-time high to that December 2018 low. And then when you're on that, you're making sure that you have the 123.6 set here. So 1.236, make sure you got that checked. And then that shows you right up here where you're at up there. So yeah, it's not going to be the fib extension tool. It's just going to be your general fib retracement tool, because that'll give you an extension of wave A rather than a projected extension of, of some other wave on that. So hopefully that makes sense there. Oh, and if you're looking for the correct wave A, it's this one again. Now, again, there's no guarantee this is, because I've shown you guys before, there is a possibility that you've got maybe a 1, 2, 3, and this triangle is 4, and this is 5. And so if you have 5 down as A, then this is not going to be an expanded flat. An expanded flat must have an ABC for A, followed by an ABC for B. And that B has to terminate above where A begins. That's how you start that as an expanded flat. If this is 5 down, then see, here's the problem. If this is 5 down, see, that wouldn't work. This doesn't work as 5 down. Because if this is 5 down, we'd have to have 3 up and then 5 more down. And we don't. We have this. So this necessarily has to be ABC. And again, if you believe this is a 1, 2 here, then again, this has to be an ABC down. So if this necessarily has to be an ABC down, then you cannot disqualify this possible ABC that's playing out, because we've got 1, 2, 3, 4, 5 for A, ABC for B, and we're working on 5 potentially here. So this is necessarily whether you're bullish from this being a 1, 2 heading up or not, this has to be an ABC down. And if it has to be an ABC down, again, that means that this ABC is very much a possibility. Very, very much. It's not at all not a possibility. Okay, guys? Because this is an ABC down. And this is very clearly an A and a B and potentially a C right now. Okay? Now, the way we usually distinguish between... Oh, I got to get going here. Real quick here, another tip, guys. If this is potentially a 1, 2, and a 3... see, we're already up here near the 161.8. So potentially could be. But again, with this right here is an A and this is a B, we haven't even hit the 123.6 extension of wave A yet. And that's what we're kind of generally looking for as it's headed up there. Don't forget, guys, monthly is a TD9 right now. And we're at resistance. We're at the all-time high resistance right here. You go, oh, but Chris, look at how the candle looks. It's a very bullish looking candle. And it's using R2 as support. It's using the all-time high as support. It may be. But guys, it's only the 16th of the month. We still have 2 more weeks of the month left. And things are getting pretty high pretty quick here. Which means, look at all this. Look at the monthly here. Look at all this room right here. In the monthly. And as far as the monthly goes, my levels I'd watch on the monthly, if we were to pull back, would be this swing high right here at 17,235. This swing high right here at 13.8. I mean, if I'm just looking at this longer term, monthly, those are the 2 levels I'm watching. We have this big, huge candle. That's a lot of space to dump down. This is a TD9 at resistance. If this month ends up back down here below, especially if it ends below this, below 17,000, we'll say, a couple hundred below that swing high there, that really does open up the possibility that we've got to further move down. And I would probably look actually more toward this candle right here. So maybe 10,100, 10,000 area. Yeah, this demand structure down here toward the bottom of the wick. Not the whole wick, toward the bottom of the wick. Is where I would really kind of be looking if we were to get a reversal from here. Everything else aside, just looking at the structure, the market structure here, that's where I'd be looking. Let me see here. You can also note that even as price has gone up here, the directional ADX here, index has shown that the the momentum has continued to drop from here. It's just, even though we've gone up higher, the momentum's continued to drop. So just got to be careful with all that, guys. Again, that's not me saying that this has to reverse from here, but we are on a TD9 on the monthly at the all-time high resistance area. It can pop up a bit higher and then turn around and come back down on you. Heaven forbid this closes below last month's open. Last month it opened at $13,799 and 44 cents here on Bitstamp. If this candle, by the end of this month, were to close back below that, don't even be thinking about higher highs anytime soon. That would be a huge bearish engulfing candle. Rejected, even if it got up to 23,000, that's still this all-time high resistance. It's within 10, almost within 10 or 15% of that all-time high. That's basically saying price got rejected in that area and came back and took back all of last month's gains, which were huge. There would be absolutely nothing bullish about that. Short term. You should expect further down on something like that. Now, it may bounce up a little bit and then continue down, but I would definitely be looking down at least to 10,000, probably lower at that point. If it were to happen. Again, this is all if it were to happen, guys. Yeah, Chris Day, what's going on, Mace? Is volume on the weekly declining as price rises over the last few weeks? Yeah. Again, notice that right there as well. You've got this volume here, and you have a spike of volume on this monthly. Let me go back to the weekly here. There we go. You can see right here, basically from the 2nd of November, so over the last month and a half, volume dropping off drastically as prices moved up. Again, bouncing off of overbought here, the top of overbought. We're well overbought here on RSI, almost at 90. Things to watch for sure, guys. And again, none of that means that we definitely have to turn down here or even $1,000 higher, but it means that this area is very tricky. There's a lot of supply coming in, along with what demand's coming in. So you want to pay attention to what's going on there. Let's see here. What's going on, Just in Time? He says the last few weeks could have also been considered consolidation, especially on lower time frames. Breakout and retest volume on the weekly should give more insight. Yeah, exactly. Again, that goes with the whole idea that what's going on here, a lot of people got chopped up. A lot of people lost money here trying to play in this, trying to guess what was going on when you had all this supply coming in near this all-time high area. Yeah. Let me see here. Got to block these people. Hey, Sir Holt, what's going on? Mac, you're very welcome, sir. Let's see here. Budman, he says, or remember what crypto Twitter keeps saying. Price always goes up. Numbers always go up. Yeah, I don't think so. There's always, anybody saying that always gets caught at some point. You know, you can make money all while you're doing that and feel real smart, and then you lose it all and potentially even more when it reverses on you. Yeah, got to be careful with that for sure. Let me see here. Teo, good to see you checking in, man. Trenton, you're very welcome, sure. Crypto Girl, what's up, Crypto Girl? Saying Tier 3 is the best place for learning and keeping up with crypto as well as other markets. She says that I'm a great teacher and makes it easy to understand and continues to teach. We'll follow up discussion. So there you go, guys. Thank you so much, ma'am. I appreciate you. Let's see. Chris Stevenson, what's going on, man? I'm going to get out of here soon, guys. He says, on moves like this, you're right in saying take profit. What percentage is recommended, 50 or 66%? I'm in at 19.4 on margin. Well, first of all, I can't ever tell you guys anything specifically, okay? U.S. securities laws require that I have an RIA license, a registered investment advisor license as a minimum before I am legally allowed to give any kind of personalized advice. By the way, if you see anybody online doing that, and it doesn't matter if they're in some other country, if they're giving personalized investment or trading advice to somebody, you know, personalized, and that person that they're giving it to is a U.S. citizen, then that person, even though they live and are not a U.S. citizen, they can still find themselves in trouble because they are dealing with U.S. citizens. Same thing, any country or any company that is based outside of the U.S., they have to abide by U.S. laws if they're selling to U.S. customers. Which is why you get the whole BitMEX and others, not denying U.S. Using their platform, because they would have to be required to follow all those draconian U.S. laws. But that said, I don't usually look at percentages. I think if you look at percentages, you're often going to find yourself more times than not disappointed. You might either take a profit too soon, or you might not take it soon enough. Just waiting for that percentage to get there. Again, there's different ways of doing it, which we go over in over in how to trade, or over there in Discord. You can take partials along the way, guys. Let's say you've got a target. I'm going to do it. God, dog, I got to get out here, guys. But listen, let's say you've got a target, okay? Let's say you've got, God, let me get rid of that. Get up here where we got nothing. Got nothing. Let's get up here. All right. Let's say that you have, let's say you enter here. Let's say it pops through, comes back, and goes back through, and you enter here, okay? And let's say your target is right up here. Now, what you can do along the way is you can take profit along the way. See the 38.2. Remember, the most important fibs, even if you're not doing Elliott Wave, are your 38.2, your 61.8, and with Bitcoin, really, your 70.5, okay? So if you want to guarantee that you're going to lock in some profit here, because you're unsure if price is going to make that full way, take partial profits. Take a partial at 38.2. If you get a reversal there, should come back around 23.6, move itself up. Take a partial at 61.8 if it gets a reversal there. Comes down again. And then take your final profit where you plan to take your profit. That way you've got profits taken in key areas that make the most sense. And if you take profit here and it pulls back and it goes higher, but it doesn't reach these two, well, guess what? If it comes back down below where you took profit, you can always get out of those positions at that point. And you made profit. Now, it's only on 1/3 of your position, but you still made profit. The key to being a successful trader over time, guys, is to lock in profit, because time and compounding expand your profits, okay? So as long as you're getting profits putting in it, that means you can take a larger position next time. And a larger position. You can keep getting larger, which means larger profits. You will not get rich overnight, guys. And if you do, you're likely to lose it just as fast. This is what we see with, when we do psychological research. On lottery winners or casino winners, same idea. They may get on a lucky streak, they may make some money and do really well, and then they blow it all or they lose it all real quick. It's no different here in the market, okay? So if you're ever concerned about where you should take profit, I mean, that's a great way to do it. Do it in thirds, do it in quarters, do it in halves. Just look at the 50%, the 50 or the 61.8 even. And just let that be your profit where you take it. Your half of your profit, and then you got half of it waiting for the rest of the ride. If you do something like that, guys, you're going to be a lot more off. You're going to be in a profit a lot more often, which means your account's going to be a lot happier, and it's a lot less stressful. The one thing you have to do, though, is stop worrying about what you missed. I can't say this enough, guys. If you were long down here at, say, 17.8, and you exited up here at, say, 19.2, because you were concerned that there might be a reversal off here because of all this consolidation and everything, concentrate on the fact that you just locked in $1,400 of movement for profit. Who cares if you missed this? You were profitable. You didn't know for sure that this was going to happen. But by locking in profit, you guaranteed that whether it does or doesn't, you made money. And that is the thing that most new traders are not doing. They're not paying themselves. They're not getting out. They're always thinking, oh, it's got to go higher. They get emotional. It's going to go higher. It's going to go higher. And often it doesn't. Or many times it'll start to, and then it'll turn around and just come crashing back down. And you go kicking yourself, man, I should have gotten out. And then you don't want to get out because now you're saying, oh man, I lost all this profit. Well, you never had that profit to begin with. You never locked it in. But you do. You worry about, oh, I lost all this. Instead of saying, well, I can still lock in the profit I have. Or worse yet, it drops down below where you entered, and you end up losing overall. And you're like, oh, well, I can't. Now I was up there in profit, and now I've lost money. I can't possibly exit now. And then you hold as it continues going down here, draining your account. You got to learn to take profits, guys. You got to learn to be more concerned with what you got than what you may have potentially have had. Because all that means is if you take profit here, it just means you've got a chance to take other trades along the way. Breakout here, comes back in consolidation here. You could have taken a trade here. All you would have missed was this little bit here. Or this goes up here, pulls back. You can get it on the pullback. If it pulls back over here, you can enter here. You just missed this, but you guaranteed yourself profit there, and now you've got a potential to make even more profit. All right? Joe Ryan, thank you for saying so, sir. I appreciate you. Crypto PNL, wave 2 retraced too deep, isn't it? Are you talking about on this right here? No. A wave 2 is valid as long as it remains above where wave 1 begins. Very valid. Yes, it's a deep retracement. No, it's not invalidated. Why does it come down this deep? There's nothing here. This is all straight down. You have this little bit here where you had this little bounce, but it taps down here where you have your demand. So sometimes you get bigger retracements on wave 2s. Or wave Bs or whatever. Just wave 2 is valid as long as it remains above where wave 1 starts. Yeah. Where can we confidently say that the C wave up, that potential C wave upward, is not a C wave and it's in fact an impulse move? Well, I don't think there's anywhere you can confidently say it. Again, there are no guarantees in trading, guys. But like I said, I'm giving it room up to around 25,000. If we're going beyond that, 25.3 area, if we're going beyond that, I'll start leaning more toward it being potentially impulsive 1, 2, 3. But even if I'm leaning that way, it doesn't mean that it can't still be this flat idea playing out. So, I mean, again, as a trader, there are no guarantees in trading. You just do your best with what you have as far as what's going on there and what you know. That's why risk management is so important. There is not any guaranteed trade. All trades are speculative, which means they all, by definition, include risk. They all are risky, all trades, because none of them are guaranteed. So risk management is just really important. Let me see here. I'm Deuce. What's up? What invalidates the expanding flat? Like I said, if we're getting above, big picture, if we're getting above 30,000, I don't see that as an expanding flat anymore. It doesn't mean it can't be. We can still have it extended. But the further that price extends, the less likely it is to be. And so you can start leaning more and more toward the other way. Trading is a balancing act, guys. There is no, it's definitely going to stop here or stop there. We called the top over here in December. We said, it went up here to 19,666. I think I had a target of about, I said it could potentially go as high as maybe 21,000, I think is what I said. But I remember talking to Scott about it back then. And I said, man, because in December, somebody was talking about February, 80,000 in February. And I said, man, this is the top. I said, we're within a few $1,000s of it. This is it. On the drop down there, see this drop right here? It went to 59.20. I had a $5,900 target on that drop. We got that. We did have the breakdown here. We had this target right down here. I think probably when we were about 4,500 or so. Hank likes to remind me of this. That we had a target down here of just about 3,100 or so down there toward where that low is. We told people to go long down here. Everybody laughed at us, said, no, don't do it. Went up. We hit 6,000. Everybody swore up and down all over crypto Twitter it was going to be hard. It was going to reverse hard. It was going to go down lower. We told everybody it's going to shoot through it like a knife through butter. It did. When we were up here at around 12,000 or so, we put this target up here. We gave us a range up here. We actually posted that on the free side of Discord in the announcements section. It's still there today, based on a point and figure count. So we got this top up here as well. I was in Discord when this was happening, talked with everybody. We were watching Coinbase lead it up. We were watching BitMEX take it down and Coinbase lead it up, talking about buying down here. And as a matter of fact, I believe Scott even bought down there as well with us, and so did a few other members. So, our track record's really, really good, guys. This one, it's been a little bit more since about 10,000, I think, around 9,000, 10,000 is where I really started seriously considering. Prior to that, I was looking at this as a 1-2 and 3 up. Around 9,000 or 10,000, everything else coming in, the economy doing what it was doing, pandemic stuff, all that kind of stuff. I really started leaning more toward the idea that we might be having this expanded flat playing out. And since then, we've looked at possible targets along the way. But if you haven't been with us and you think of what I'm saying, you're going, oh man, he's such an idiot and he doesn't know what he's talking about. Just understand, these are what we've done along the way. Feel free to talk to people like Hank or others that have been around us, data, for 3 years now. They'll tell you. I just don't want you guys thinking that I'm talking out of my rear end here. There's a lot of stuff to pay attention to, but the number one thing to remember is trading is just, it's not guaranteed, guys. All right. You absolutely have to get that figured out. There are no guarantees in trading, so you have to get your risk management. You really do. If you don't, you're not going to be around 25 years like me. If you're not seriously working on your risk management every single day, is the most important thing you're going to do as an investor or trader. Okay. Let me see here. So there we go. Chris Stevenson, sure thing, man. Definitely let us know, man. So there we go. That's kind of where we're at. Let me see here. Yeah, I've really gone over here. I don't mean to keep you all. Sorry about that. I just want to kind of get some real important trading, ideas and thoughts about trading in general that I think you guys really need to know. So that's where we're kind of at. Again, if you want to learn more, guys, join us here at howtotradetowin.com. If you've never joined us before, you can get your first month of Tier 3 for half price. So definitely jump in that. I put the code there earlier in the program, so you can scroll up and see that. Or you can just join me back over here on Twitter here. On December 14th, I posted it. You can get that code right there off there. All right? So there you go, guys. I hope you have a fantastic day. You trade safe. Remember, the only thing you control in the market is how much you lose. That's it. It's all about that risk management. You guys have a fantastic day, and I'll catch y'all later. Take care.